Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we are going to talk about the tax implications of inheriting real estate. You know, every so often we get clients that will approach us, they had a parent or a sibling pass away and they left them their house, and what their immediate first question is, what are the tax implications? I've got Andrew McMillan here with me. Andrew, what are the tax implications when you inherit real estate?
Yeah, so when you inherit real estate, and again, we're talking about when someone passes away and they leave you their home or some real estate that they had. So they passed away and you're now the beneficiary of that asset. So when you inherit that asset, the good news is oftentimes you get to wipe out a lot of potential tax liability there, because you're going to get a stepped up basis in that asset. And all a step up basis means is you get to reassign a value to that asset that you inherited to the fair market value at the date of death of the person when they passed away. So it's almost as if you purchased it from that person at whatever the fair market value was when they passed. So, for example, if someone passes away and that you inherited their home, and at their date of death it was valued at $500,000. So if you go sell it in 2 or 3 months, it's probably still worth about $500,000. So when you go sell it, you sell it for $500,000, and you can deduct that stepped up basis value away from that, off of that, so that you're paying taxes on zero income. So there's no taxable event there. So oftentimes when you inherit an asset, when someone passes away, a real estate asset, and then you go and sell it pretty much immediately or within a few months, that value is going to be the same, so you really don't pay oftentimes zero taxes on those.
But if you're not going to sell it immediately, then you definitely want to get an appraisal.
Yeah, so there are situations where you inherit it and it can be a year, 2, 3 years down the road, and you decide to go sell it later. So again, if you inherited something that's $500,000, 2 years down the road it's $600,000. Well, now you're going to have a $100,000 gain that you'd have to pay taxes on.
But you got to be able to prove that amount when you inherited it.
Yeah, a lot of times we recommend going ahead and getting an appraisal done or some sort of valuation done.
Some people, they try to use tax cards. Tax cards usually isn't a really good thing to use for fair market value. I mean, when you don't have anything, it can be, but we definitely recommend you get an appraisal if possible. Awesome. Well, really good information, Andrew, on the tax implications of inheriting real estate. If you're inheriting some real estate and you have some questions on the possible tax implications, feel free to give us a call and we'll help you out. Thank you.